So again, I'd like to welcome everybody to this event. This is the Live the Laptop Lifestyle special event. We're going to go through how you can create online wealth through trading and investing. So a lot of people are looking at ways of generating extra incomes from home. Some people do marketing, some people do online sales, some people do other type of web-based businesses. What we're going to specifically focus on tonight is how trading and investing can fit in with that target, that goal of actually generating income from home. So a little bit about the Trading Coach team and who we are, who I am, and what we do. So this is me, this is Ron, and a little bit about me. 7.5 years I was an assessor at Centrelink. So I worked with a lot of people that were coming in as both an assessor and a financial information service officer for a short time on how they can get the most out of their benefits, but also what options were available to them for investing and how to get the best returns out of those, and how that would affect their benefits from Centrelink. That's quite a while ago. That's going back to the mid-90s. After that, I worked at the Australian Taxation Office as a business auditor and as a GST auditor. So my job there was to work with businesses to find out how their businesses were operating, look at how they could claim their deductions for GST, and how they could grow their business. So I learned a lot about business in that time, and that basically encouraged me to start my own business. So for the last 15 years, I've been running several businesses in and around trading as my primary source of income, and looking at getting into other businesses that could generate active and passive incomes for me as well. I've been an educator and trainer for 20 plus years. So part of my role at Centrelink and the ATO was also working as a trainer for both staff members and also for the general public as well, doing outreach and doing some public events as well. So I've been training and educating for 20 plus years. I've been trading myself and investing for just over 15 years now. I started when a friend of mine who'd been trading and investing for a while was taking on a project to teach a few people who had no experience in trading whatsoever to start trading. I worked with him and a few other traders to develop my trading and learn from them how they did their trading and basically build up from there. So I've been trading and investing for 15 years, and I've been coaching traders for just on 12 years now as well. So in and around different projects and larger and smaller groups, private groups as well. I've been coaching traders to really develop their own trading business as such, so that they could implement strategies that work for them, for their risk profile, what outcomes, what goals they wanted to achieve, and incorporating special skills that they may have developed that had them successful in their own life. So in other businesses and other jobs, how to translate those skills into trading and become successful. That's a bit about me. Who we work with at the moment, our team, and this is some of our team. This is from one of our recent events up at the Gold Coast. We've got some of our current traders and some new traders in there as well. There's a few familiar faces. Some people might know some of the people there. We've got Elaine in the pink shirt, and we've got Paul in the red shirt, who are working with us as our business development and business trading business consultants. Also in the green, I'm the one wearing the black shirt with the red logo on it, and Peter Schmiedel is one of our Step 4 traders. He's wearing the black shirt with the green logo on it. So a few other traders we have there. We talk about Step 4 and Step 1 and Step 2, and that'll make a bit more sense as we go through this event and learn how we really approach taking a step-by-step approach to trading. So basically our team are made up with fellow Lift investor traders. So these are people who are actually creating their own income from trading and investing, and who they've come from all different backgrounds, all different walks of life. As you can see, some people from nursing backgrounds, some people from business and building backgrounds, some people from project management and IT backgrounds, some people who are working in retail and work in hospitality as well. So they're being united by a common direction, which is to really establish themselves as an investor and as a trader, and start creating an income in their spare time to either supplement their income or replace their income. So we also work with mindset professionals, people who coach and guide people through various mindset challenges, neurolinguistic programming, EFT tapping, hypnotherapists, psychologists as well. We work with business coaches, people who are actually in the business of helping other business owners perform better in what they do. And we apply a lot of those principles in trading as well, as we approach trading as any other business. We work with accountants and lawyers, and we have several of those who are actually in our program, in the Lift Investor Trader program as well. And investing experts. So we often work with financial advisors, financial planners, and other investment brokers who have access to what we call non-retail or wholesale investment options as well for people. So we'll talk a little bit later about what's a retail investment and what's a wholesale investment, and how to basically make your dollar go further, minimize risk, as well as improving return on investment as well. And also we're working with experienced investors and experienced traders as well. So a lot of people come into our program and they may have had little experience or no experience. We also get several traders who come into our program who basically they've spent the last maybe 5, 10, 15 years trading, not getting the results that they want, getting a measure of success, but never actually breaking through to achieve the results that they want. So we work with those people to help them really refine their approach, their business-like approach to trading and investing, how to set up a business around what they've already done, how to teach them a few new skills that they might be able to use to improve their return on investment, to minimize their risk, to create more consistent positive results as well. So that's pretty much our trading coach team. And depending on whether you decide to work with us or not, that you'll start interacting with some of these people as colleagues and as mentors as well. They'll start working with you to help guide you as you get started and start building your trading business. Really, the first question we generally ask someone, if I'm sitting down with somebody over a coffee, as I do a lot, to ask them whether this is the right type of business for them. Really, we want to work with people that have some goals, some targets that they want to achieve, something that they see as a measure of success that they really want to generate. So when looking at why you would want to build a laptop lifestyle, a lot of people come back with lots of different reasons why. There's as many reasons as there are people that we work with. But generally, we're looking at people who want to generate some more cash flow. So the money that they're making in their day-to-day work or their day-to-day business isn't necessarily getting them ahead or getting them to achieve the targets or goals that they want. So they're looking at an additional stream of income that can be there to supplement or to replace their current income as well. We have a lot of people that look at starting to trade and invest as a way of building up a balance of funds they can start investing in other things like real estate, other businesses and so forth. So if you'd like to get involved in real estate, but you're looking at, hey, I need to get a deposit to buy a rental property, or I want to get into a property development, but I need funding behind me, or I also need to have cash flow as well to service loans and so forth. And we found recently that a lot of the banking institutions, as a result of the recent Royal Commission, are starting to clamp down on a lot of the people that they're lending to. And having an additional income stream that you can demonstrate as a growing income stream that's based upon a business is a good way of being able to prove to banks and other lenders that you're in a position to get into the property market or to increase your property holdings. You might as well be looking at a way of boosting your other investment funds. You may have had some results with some trading, you may have had some results with investment, but really looking at how you can take those results to the next level and start improving compounding and diversification of your portfolio. You might just really have the lifestyle goals as well. You want to be able to travel, you want to be able to live the lifestyle that you want, where you can wake up in the morning and your day is your own. You don't have to go to a job or to a business. You don't have a boss or a customer telling you what you should be doing for the day. Hit the open road or do some traveling, travel the world, start going to some islands and start spending time with the people that you love as well. So when you look at how to build a business, the most important thing is that you have to know why that you want to build a business and what would appeal to you about having a laptop lifestyle income. So the laptop lifestyle is where you can be wherever you want to be in the world, as long as you have an internet connection and know that you can generate the income that you need for that day, that week, that month, or that year. and not have any constraints around time or your location or somebody telling you what to do. So that's generally what a lot of people talk to me about when they're looking at building a laptop lifestyle income. And if you've got something else that you think is more important to you, that we'd love to hear about what you're looking to do as well. So with the printout that I sent today, the PDF that everybody should have received in their email, you would have gotten 2 emails, one yesterday saying that here's a link to the Zoom event, and then you would have got another one that says here's a note sheet that you can use to start taking notes, and it'll guide you through some of the important keys that we'll go through tonight. This might be something that you want to start looking at. What are your goals moving forward? What do you want to achieve in the next 1, 2, 5 years? If you were able to generate an income from wherever you are without anybody telling you whether you could or not, what would you do with that? How would you live your life? So going through what we're going to go through tonight, again, I'll go back to, this is the document you would have received in an email, and I suggested that maybe it's a good idea to print this off. And you see at the very top, why do I want to develop my laptop lifestyle income? And then it preempts a little bit what we're going to go through tonight and some areas to take some key notes in. So if you printed that off, fantastic. If not, that's okay. Take plenty of notes. And as I said, Paul or Elaine will contact you over the next couple of days just to touch base and see if you had any questions or whereabouts you're at in looking at getting started in something. And how we could possibly help you with that. Feel free to use that laptop lifestyle event coaching summary sheet and take down plenty of notes. So we're going to cover today is really how you can make money, and we're going to talk about the Cashflow Quadrant, which was a book written by Robert Kiyosaki, and it really breaks down the 4 key incomes that most people will fall into, and we'll look at the leveraging around that. When we talk about leveraging, I'm talking about how you can add experience and knowledge and action and money together so that you can generate a larger income, either in a passive or an active style, or whether you're looking at developing multiple income streams where these incomes would actually fall into place. We're going to talk about investing and going from retail cents to wholesale dollars. So where you can start making money, make money for you, which is really the goal of a lot of big-time investors and a lot of people getting started in investment. How can I put money into something, leverage it with my time, my experience, and my actions, and then turn more money from the money that I invest? How do I create more return on investment? We'll show you how wealthy investors can build multiple income streams, and they say that most millionaires have at least 6 income streams, and we'll show you how they can start to build that, and how from where you are, some steps that you might be able to take to get on that path as well. We'll show the benefits of Forex trading. So I've been trading Forex for about 15 years, and there are definitely other investment options out there, a lot of markets that you can trade, but we'll go through specifically tonight on the benefits of Forex trading. So currency trading, foreign currency trading, foreign exchange, or Forex trading. The 5 strategies to make profit from trading Forex. So we're going to show you a few good strategies that you can use to trade Forex, and as well as other investments such as CFDs and shares and so forth to really boost your income. And they're strategies that pretty much anybody can implement. They're not challenging, they're not tough, they're actually pretty straightforward, and some fall under that common sense strategy category, but if we're never shown how this really works, and it can be hard to get going with this and seeing where we can make profit from these strategies. So what we do, what the Trading Coach International does, how we work with people, and what we're committed to, what a Lift Investor Trader business looks like as well. So I'll go through a little bit about some of the results that some of our members are achieving from their trading at the moment, and what they're taking that into, and really some of their whys as well. And then how to get your laptop lifestyle started. And that may involve trading, it may involve something completely different, it may involve several strategies as well. So here tonight, we're just going to talk a little bit about how what we do may fit in with one of those strategies for you. So that's pretty much what we're going to cover in this session tonight. And hopefully by the end of the night, you'll achieve some value out of this. And you've got some questions to ask. We really love to have questions. So a good target is to have at least two or three good solid questions to ask either Paul or Elaine when they contact you in the next couple of days. So are you leveraging your way to freedom? And Robert Kiyosaki talks in this book, Rich Dad, Poor Dad, and then the book that you see the cover of on your screen now, Cashflow, Quadrant, really how to work smarter and how to leverage time, money, knowledge, and action into developing a larger income. So in the book Cashflow Quadrant, Robert puts into 4 quadrants most of the income that most people generate. And he's put them down as E, S, B, and I. So E stands for employee, S is for self-employed, B is for business owner, and I is for investor. So we'll look at that a little bit more detail before we move into really the whole key for tonight, which is how to get into this investor quadrant down the bottom right-hand corner. So as an employee, you've got, when you're working for a boss, you really have one active income for that employer. So that active income means that if you show up and you do your job, you get paid. Generally, you get paid about a quarter or less of what you're actually worth. You think of it from a commercial perspective. If a boss actually paid you exactly what you generated for their business, they'd go broke. So every dollar that they pay you, they generally make at least $4 from you. So in that way, if you're looking at, you earn on average, as most people in Australia, the average is about $67,000 per annum. So let's round it up to 70,000. If you're getting paid 70,000, the odds are that you're making at least $280,000 for your employer per year. And you're basically getting paid a percentage of that in return for obviously things like superannuation, holidays, job security, and so forth. If you've developed the skills to generate $67,000 or $70,000 in your job, you actually are generating a lot more than you're getting paid for. So what we'd like to talk about a little bit tonight is how you can leverage some of those skills into a larger income where you work for yourself and you reap the benefits of all of your hard work as well. So basically what you're doing is you're generating an income for somebody else, an employer, whether that's private company or an individual. Even if you're working for the government, as I did for many years, I was still making them rich by making sure that people pay the right amount of tax. If people weren't paying the right amount of tax, then it was my job to make sure that they did. The average income in Australia, so basically they look at everybody that's employed in Australia, and this is from the most recent statistics from the Australian Bureau of Statistics, that the average income of the previous financial year for everybody combined, divided by the number of people who are working, was about $67,000 per annum per person. Now, to some people that may sound like a lot, to some people that may sound like not very much at all. It's all very relative. We all know that if we're earning a particular level of income, then our expenses will be measure for that level of income. The more you earn, generally the more you spend. People just who have a larger income oftentimes just broke at a different level. As an employee, the most important thing to realize is that if you don't work, you don't get paid. I heard a pretty sad quote the other day actually that said that if you were to pass away tomorrow, the odds are that your employment, your job situation's vacant for your position would appear in the newspaper before your funeral notice did. Businesses must go on regardless of what happens to a person, and if you're not performing, then most businesses it's their responsibility to make sure that they replace you with somebody who can. So in this situation as an E, you're actually being leveraged. You're being leveraged from somebody who's either in the S or the B or the I or a combination of those quadrants. So that's basically what an employee, their income is generated from. As a self-employed, what you're really looking at is creating your own job. You have a business as such, but that business involves you being fairly active. And again, if you work, you get paid. So the thing about being self-employed is it generally involves a lot of startup costs, and you work a lot more active hours as well. Employees can work 40 to 60 hours per week, but most self-employed people work a lot more hours than that as well. And there's a lot more risk associated with being a self-employed. You don't actually have the benefit of having somebody guarantee an income for you or guarantee you a position. So generally that leads to a lot more stress. And the statistics are that 60% of self-employed and businesses fail within the first 3 years. There's that's a sort of sobering statistic that most people get started. They may be really good at what they do. They may be really good technicians, they may be really good builders or electricians or plumbers, but maybe don't necessarily have the ability to convert that into their own business where they can get guaranteed their own income. So with that, if you work more, you get more pay. So you still have a boss. You've just got lots of bosses. They're called customers, and customers will determine for you what your income level is, and you determine how much work you're prepared to take on. When you're talking about self-employment, the biggest factor to take into consideration for self-employment is the competition, the marketing, the ability to compete in an environment where you've got other people out there who just like you are self-employed and they want the same customers that you want. So you have to have some sort of edge or some sort of system over them to actually generate a more reliable income. So in this case, you've got some leverage. The next step up really from being self-employed is where you've come to the point where you've been self-employed and you realize that maybe you need to have a system in place that will start generating an income for you, or that'll help you better manage your business so that you can produce a larger income and maybe start franchising out your business to other people. So you're talking about people like in the gyms group as well. Somebody who's self-employed might have a gyms franchisee business, might be a gyms franchisee. But then the people that own the franchising system are people like Jim, who has lots of people that they work for themselves and they give him a percentage of their income because he's helped them set up certain business practices and structures and strategies to help them grow their business. That's where we get into the business owner realm. So generally business owners you'll have others work for you, whether that's employees or it's people who are self-employed or contractors. The goal with a business owner in this system is to multiply yourself so that you get a percentage of other people's effort. So instead of you working 50 hours a week to generate 50 hours worth of income, you may have 50 people that pay you 1 hour per week, and therefore they work the hours, and because you support them in their growing their business, they pay you a percentage of that. Generally in this type of business though, you've got higher startup costs and generally longer startup lead times as well. It takes a long time for a business that gets started to really prove that they have an ability to franchise themselves or to multiply themselves. So it can take a long time to start these businesses up. And at the moment, there's a lot more competition. There's so many more franchising businesses coming out there. And Paul and I, who's on the call, had a conversation a couple of months ago about the businesses of the future. To be competitive, they'll need to have this edge. So most businesses moving forward generally have to be involved in some sort of franchise or some sort of licensed business to be able to compete with other people in the industry. And some of these franchises can cost hundreds of thousands of dollars to get started without any real guarantee that you'll be successful at it. They give you training, they give you education, they give you an area, they give you a location, and then it's up to you to really generate the business and work with that. With business owners, obviously, you've got things like staff costs. So staff costs just aren't things like wages, it's superannuation, it's insurances, it's taxes and so forth that you have to pay on behalf of actually having people work for you. And the other staff costs can be that if you give the job to somebody and they don't do it the way that they should do it, it could be lost customers as well. So as a business owner, you have a lot more stress. You may be making a lot more money, but doesn't necessarily mean you have a lot more time. But in this situation, you've got this higher competition that comes into it. If you have a good system, if you have a good process to actually generate income, the great news is that you've got more leverage than people that are employees or self-employed. But there's one quadrant really that stands out amongst the rest as the way to have the most leverage, and that's as an investor. So as an investor, your money multiplies itself, so your money grows more money. So again, like a business owner, you've got a system, you've got a method, you've got tools, you've got structures and strategies that help you get a greater return on your investment. And some of those investments may be active, where you put some time and effort into it initially to get it started. And others may be more passive, where you just basically have money to invest in a company or in a development or in a property. Then will generate more money for you without you having to do a lot for it. Not very many passive investments out there. A lot of them will need you to keep some maintenance to get started initially, and then maybe a little bit of maintenance as you go along. So most investors look at having a stable of several investments, both active and passive, that they can use to generate different incomes in different times from different products and different segments of different markets. Your time multiplies, so not only do you have money multiplying for you, but because this money is generating income for you while you're asleep, you don't have to be active there in most of these incomes and investments to generate more income. So developing multiple income streams is really a key to being an investor. And developing that lifestyle passive income, or mostly passive income, where you have enough money to live the lifestyle that you want. So the first question that most people ask is, well, that's not something they generally teach in school. You can't go to a university or at high school. They don't teach you how to get started as an investor. They may teach you how to run a bank account at most. They may teach some people who are financial advisors and financial planners how different incomes work and how different investments work, but they don't necessarily guarantee that you're going to make money from it. It's more of an active approach to building an investment portfolio around what you do. So if you can do this, the great news is you have the most leverage. And really this bottom quadrant is where most lifestyle investors' goals lie, is to get into this quadrant. And the truth is that from any other segment in this quadrant, you can generally find a way into it being an investor. It's just knowing what you have, knowing what strategies will work for you, and then what actions to take, and then just taking them. So that's really the cash flow quadrant as Kiyosaki shows. And I think it's a good model to get an idea of where you are at the moment, where you want to be, and some of the benefits and challenges of being in different aspects of this quadrant. So when we're looking at some of these investments, a lot of people will look at people that an employee would be superannuation as their investment. But as an investment, is superannuation really that super? I'll show you some figures that actually may change your mind a little bit, or may help you look at other ways to add to what you're doing with your superannuation. So overall, the last 10 years, superannuation has yielded about 3% in total per year across the board. So looking at all superannuation funds, the good, the bad, and the ugly, overall, the average rate's about 3% per annum. Now, at the moment, and after the last 10 years, CPI has been running about 1.8%. So that means if you had $100 last year, you'd need to have $101.80 this year to buy the same thing you bought for $100 last year. So taking that into account, we're really looking at a real growth of 1.2% per annum. As an investment, it's not a lot of income. So looking at this superannuation option, let's look at some figures. So the average income, as I said before, is about $67,000. And the most recent survey done to the superannuation industry is that on average, the average male has about $71,475 currently in their superannuation. Women, it's a lot lower. We'll talk about that a little bit later. So if you're looking at where superannuation is, the employment contributions are 9.5% per annum. So if we have a look at this spreadsheet here, you can see that if you've got 25 years left until your retirement or retirement age where you can actually access your superannuation, starting with the average of 71,475, looking at your contributions and that average interest of about 1.2% per annum. In 25 years, you're really looking at basically having a balance when you retire of about $282,814.07. So if you're looking at living your current lifestyle and not have that generate any income, you're really looking at about 4 or 5 years worth of lifestyle in that what you've got in your superannuation fund. Now, what do people have when they get to that retirement age? We'll look at that in a minute. But that's a bit of a sobering thought. So really, if you're looking at getting any return from superannuation, then most people would suggest that if you're able to make contributions, and you can make contributions, but still at that 1.2% interest rate per annum, it's fairly low. So let's look at a few options. So this is what we call a retail investment. You're not putting any effort into it, you're putting money into it. And because it's being managed by a fund manager who obviously has expenses and overheads, they'll take a percentage of your profit to pay for their profit and also their operational costs. So they're not really giving you the full benefit of your investment. They've got costs that they have to wear in doing this for you. If you're looking at the best rate per annum, the best rate at the moment is running at about 8.09%. So if you wanted to have a $67,000 income, so if you wanted into retirement, continue just the average current income, you'd be looking at $828,122 in superannuation to generate that sort of income. So if we have a look at that 282,000 based upon the previous study, just an average income, 67,000 with an average return really won't get most people up there. And if you actually look at the Association of Superannuation Funds for Australia, this is what they said most recently is the average male has at retirement in their superannuation fund, and the average female has in their superannuation fund at retirement. So for men, generally have about 292,500. So it's right in line with that model that we just ran through, where you've got about enough there. If you look at 8.09%, you've got enough to make about $20,000, $24,000 per year on average, and that may be enough if you're able to be in that top best rates superannuation fund. So if you have a look at that, that's kind of the expression on my face that I had when I realized that superannuation really wasn't going to give me the lifestyle that I was looking at when I was heading into my 60s. And then if you look at the average woman, they only generally have about $138,150 in their superannuation as well. So superannuation is a way to keep you just above broke. It's not necessarily going to give you the lifestyle that you want. So if you're in a position to now look at other options to generate other incomes to take you into retirement, and retirement isn't a function of age necessarily, it's a function of financial resources and the support that you have and the structures you have to generate an income, then really looking at doing something apart from just superannuation might be a good idea for most people. And if you've got a lot of money in superannuation, I know people that got $1 million in superannuation, that's fine for them. But again, if they've got $1 million in superannuation, they've generally had a high income going into retirement, and to maintain that same level, they've really not got enough financial resources to do that either. So having a look at then a better way. So if you want to be in the I square, that investor square, what options do you have? What do wealthy people do? And it comes back to what I was saying before about developing multiple income streams. So multiple income streams is where you have an income coming in from some business or some property that then you put into a fund that then supports and grows into other investments. They start to work together and start building you an income stream where you've got multiple replaceable incomes coming in, that either passive or active. So let's have a look at this works. So we have what we call a lifestyle income fund in the middle here. And generally people get started because they're putting money in from their business, or they're putting money in from an employment. We like to say that if they have an active business income, the money they generate from that percentage they put into their lifestyle income fund, that money then gets put into their first passive income stream or their first investment income stream. And then the money from that combined with their first income goes in and creates your second passive income stream. The money from that and those other two investments then goes into your third, and that goes back in together, and that comes out back into your fourth income stream. As I was saying before, if you're looking at living a millionaire lifestyle where you've got $1 million worth of active assets generating an income for you, most millionaires with an income over a couple of $100,000 per year into the $1 million per year income have at least 6 in these investments in place. And no matter where you are now, some people can build these in a fairly short time frame, depending on what you're prepared to do, what sort of actions you're prepared to take, and how much you commit to actually generating this income. So with the income that you generate from this lifestyle income fund, it goes into things such as really important things like spending more time with your family, owning your own homes, retiring early and comfortably. It's like I was saying before, retirement isn't about necessarily like, hey, I'm 65, I'm going to kick up the feet and start watching television, or go caravanning or go fishing every day. It's about where you get to live the lifestyle that you want without having a job to dictate when you're going to be somewhere and how much money you can make. And then really just become financially independent, where regardless what happens in a particular industry or with one of these income streams, you can replace it with another income or two income streams to replace that one income. So it's where money starts leveraging out and starts working for you. So you might be looking at it and go, well, that's great, but how do I get started? Like, if we're looking at an active business income, and what we're saying is that there's a potential of doing this as a trader, as an investor, where you can start actively generating this business income for you. How do we actually get started with that? So looking at online investing, trading and investment businesses, you look at the benefits of them. The benefits are that you get to work from home or from anywhere. So as long as you've got a laptop and you've got internet connection, you can trade. Pretty much 24 hours a day, most days of the week, 5 days a week at least. You've got lower startup and ongoing costs. So we'll talk about really an investment. If you're looking at setting up a business, we're saying before, any sort of franchise or traditional bricks and mortar business will cost you a couple of $100,000 to get started, either in startup costs for a location, for stock, for technology, for website, the ongoing education. If you want to start a McDonald's, for example, you really have to have at least $1.5 million, and a lot of that's got to be in cash. At least 40% of that has to be in cash. You have to, if you start from McDonald's and it's franchise as an example, you have to commit yourself to a 12-month education program where you don't get paid, but you've got to support yourself while you're learning how to run a McDonald's restaurant. And then there's all the other costs associated with that as well. So if you look at online trading in comparison, getting started in online trading investing is a very minimal cost as an alternative. You get to work around your schedule. So if you're doing this as a supplement to your current income, or you've got other businesses and you've got employment as well, trading and investing is something you can do in your spare time or in your outside business hours. There's no competition, so you're never competing with anybody. In trading, there's obviously, if you're looking at a market like the foreign exchange, you're competing with other traders, but we'll look at that, how risk management works and how that actually works. And there's no customers to deal with, there's no marketing costs, there's no stress of having employees as well. So you don't have to be tied to a location, you don't have to be tied to a schedule, you don't have to be tied to customers or staff or marketing as well. And you can really build a strategy based upon your own personal risk profile and your goals and your strategies, your strengths and your skills. Now, there's challenges associated obviously with starting any business and with online trading and investing. The first is, which market do you start off with? Shares, cryptocurrency, foreign exchange. So let's look at shares, for example. The average return per share on the Australian Stock Exchange in the last 12 months was about 6.5% per annum. Now, there's some that produce a larger return, there's some that produce a smaller return. But if you look at them overall, we're looking at about 6.5% average return per annum. So if you're looking again to make that $67,000 per year, just the middle of the road income, you'd need to have at least $1,030,000 in shares to generate that sort of income with that level of return, which is, again, a sizable amount if you've been relying on investing money that you've had in superannuation or money that you've put aside. It's kind of hard to invest $1 million unless you've actually made $1 million. The next option is cryptocurrency, and it's been becoming a lot more of a conversation around trading, an option for people to trade. But the last time, you see that I've got a couple of figures on there, 2,086 was crossed out, and now there's 2,112. The last time we ran an information event like this, or a workshop like this, which is only a couple of weeks ago, there was 2,086 cryptocurrencies listed. Now there's 2,112. So that's, for those of you who are mathematically inclined, that's another 26 in the last 2 or 3 weeks. Now, the first thing is, how do you know which ones are going to produce money? How do you know which ones are going to lose money, and how do you get into the right one? On average, 95% of profits go to first investors. Those people that get into the right cryptocurrency at the right time. there's a caveat to everything that I'm saying tonight, is that if it works for you, keep doing it as long as you can. If you've had some success in trading cryptocurrency, keep doing it the way you're doing it, but consider diversification with your profits. Putting your eggs in one basket as a strategy generally is doomed for failure. If you're generating income from something like cryptocurrency or other sorts of investments, look at ways you can actually develop these multiple income streams that are different types of products that can help you produce different incomes in different markets and different environments. So that's the biggest challenge for most cryptocurrencies. So generally, I don't deal with cryptocurrency. I don't trade cryptocurrency. We have traders that we work with that do. But for us, we've found that the markets, for us, for the people that we work with, is generally a bit too volatile without enough bricks and mortar or fundamentals behind it to really give you enough confidence to trade consistently in that marketplace. So looking at then at the next challenge really is the commitment, the profit trading mindset. It's the I'm trading this as a business to make money. It's not a hobby. It's not something that I do in my spare time. I don't dabble. I'm here to make a profit from it. Having the education and support behind you to really get started, get your business established, get your trading business established. Look at direction of how you can go, what to do first, what to do then. Once you've achieved your first couple of goals, how do you keep this momentum moving so that you start getting closer and closer to your ultimate lifestyle that you want to create? So that challenge around education and support that actually guides, inspires, and keeps you on track. And your time and money investment as well. So really, if you're looking at putting a large amount of money into it, the more money that you start off with is, the more you're looking at a passive type of investment. And passive investments generally don't generate a larger sum for you. It's either going to be, if you don't have the education or the understanding or the strategies or the skills to actually create a consistent income, and you put a lot of money into your trading, then you're basically doing a lot of maybe gambling with some of the assets that can, if you put some strategy behind it, take some consistent steps, can actually help you achieve a consistent return on your investment, and that helps you grow for you. And this is the biggest thing, is having that strategy that works consistently in different markets, in different timeframes, in different bullish or bearish markets, having a strategy that actually works for you consistently. So here's an article that was actually published about us and what we do in the 14th of February in the Melbourne Age, and basically using technology and training to set up an income stream where you can develop an active income stream initially, then create long-term profit by managing your losses and your wins, setting goals, achieving momentum, and then moving forward with that. So if you wanted a copy of this, it's actually available. We've got a link to it on our website as well. And we also have a PDF version of it on our website as well. So this is the just recent Valentine's Day, actually, where we had the Melbourne Age do an article about what we do. You don't need a large initial investment to get started in currency or Forex trading. You get started your first live trade, once you've gone through a period where you're demo trading, where you're in the real market, but you've got no real money into the market. Once you get consistency with that, your first initial investment's less than $150. So you don't need to get started trading the foreign exchange with tens of thousands or hundreds of thousands of dollars. You can get started at a smaller level and gradually grow to the point where you have the confidence, you have the ability to increase your investment based upon the results you're currently producing. And one of the biggest strategies really is compounding your profits to grow consistently. The big wins are great, but the bread and butter trades, the 5 pips per trade, 5% profit per trade, 4 times per week is what really grows a lifestyle income. And with foreign exchange, it's actually what we call a leveraged or a margined trading market, which means that and it's all done automatically for you as part of the deal with a broker, that for every dollar you put in, it actually gives you access to trade $100 worth of funds. But using your strategies, your risk is based upon the amount that you invest rather than the amount that you've leveraged. We'll talk a little bit about that as we move through tonight. And that margin loan's generally about 2 to 3% per annum. And so it's basically the cost of actually leveraging your funds so that you've got a bigger access into the market to make your small investment produce a larger return. And if you wanted to know more about that, obviously, over the next couple of days when you hear from one of our trading business consultants, they can definitely run through a little bit about that with you to give you a better understanding of how that works and the challenges, but also the benefits to you as well. So in the market, that leveraging gives us the ability to trade fractions of the market. So when we look at a market, say for example, this is the value of £1 versus the US dollar. So for every £1 you could get 1.2365 US dollars. That fourth digit from the decimal point is what we call a pip. And a pip is short for price interest point. It's also called a point. So by leveraging, what we have access to is instead of that 3 going up in price and then producing us a cent worth of profit, if the 5 goes up, then we get 1% profit from that increase. Or if it goes down and we take a short position, we get a 1% profit from that decrease in price. So if it goes up to 1.2366, that's moved up 1 pip. Therefore, that gives us 1% profit if we're looking for a long trade. If it had gone from 1.2365 down to 1.2364 and we'd sold, so we'd actually decided to go into what we call a short position or a bearish position, and we'd actually make a percentage profit from that decrease in price. And we'll go into that a little bit more in a second as well. So there's also low transaction cost. So getting into the market doesn't cost a lot. They don't charge you a high commission for every transaction you make. The average commission is about 0.6% to 1.6% per trade. And part of the strategy we teach is if that's what we call a variable spread or a variable commission. If that spread goes above a certain level, we suggest that maybe the market's too volatile and therefore not as reliable or not as predictable as we'd expect it to be. So that might be one of our strategies to not get into a trade at such a volatile point in the marketplace. You can trade Forex in your spare time. So market's open 24 hours a day, 5.5 days a week. And for us in Australia, the great news is that most of the market occurs in the largest part of the market in European-based currencies and the US-based currency pair. And those markets are generally open outside our 9 to 5 business hours in Australia. So if you're currently working a 9 to 5 job or you're occupied 9 to 5 at the moment, then this is an option for you to produce an income outside your normal business hours. So how does Forex trading work? So this is what we call a candlestick chart, and the green candles, the green bars, represent an upwards movement in price. The red bars represent a downwards movement in price. So overall, on the left-hand side of the market, you can see price has risen, and on the right-hand side, price has fallen. So there's different traders in the marketplace that prefer to take rising trades and some that prefer to take falling trades. And depending on their strategy, they may do that over minutes, hours, days, weeks, or months. And these traders, we call them either have a bullish position or a bearish position. And what they do is they exchange contracts with each other for certain sizes of currency holdings. If one had 1,000 contracts and the other had 1,000 contracts, one would buy and one would sell. And that completes a transaction. When the person who bought wanted to get out of a trade, they press sell to get out of the trade. When the person who press sell to get into a trade, they thought the price was going to go down, wants to get out of a trade, then they press buy. So there's always a contra transaction to each contract. So the way it works is, if you're looking at, we call it a Forex contract or a CFD, which is contract for difference. If you're looking at the market and expecting that price is most likely to rise, then you enter the trade by setting your buy price or clicking your buy button. That means that for that particular contract, your buy price is the current market price when you click that buy button. If price goes up and it hits a point where you think it's not likely to go up any further, then you exit the trade by clicking your sell button and setting your sell price. So the difference between your buy price and your sell price is really your profit. So you've bought low and you've sold high. And generally, when we're talking about trading and trading shares and so forth, people get that concept. It's a pretty easy concept to get. But in foreign exchange, because it's what we call a binary market, you can actually make money when the market's falling as well. So let's look at how that would work. If you expect the market's going to fall, you do the opposite. You set your sell price. So you're saying at this point in the market, I think this is the highest the market's going to get. So for this particular group of contracts, I want to set my sell price at the current market price. So I think this is the highest sell price I'll get for it. If you're right and the market goes down, when the market hits a low in the market, then you click the buy button and that sets your buy price for that contract. So if your buy price is lower than your sell price, so again, you're making profit from the buy price being low and the sell price being high. If you get that concept, that's probably one of the most challenging concepts in trading to get. If you get that, fantastic. If you want a bit more information, then I'm sure that our trading business specialist will be able to go into that in a bit more detail with you to explain it a bit more. But this is probably the biggest challenge in Forex trading is people getting that you can make money as the market's going down. So let's look at some of these strategies we're talking about. And the biggest strategy, really, the number one strategy is treat Forex trading like a business. Your bank does. So if you want to have a look at the market, overall on a daily basis, the foreign exchange moves about $5 to $5.5 trillion US. That's TRILLION, trillion dollars, which is 25 times larger than the US equities market, which comes in around about $200 billion per day. And if you have a look at who trades the most of this, the top 10 are the leading banking institutions and financial institutions, such as Citigroup, JP Morgan, UBS, Deutsche Bank, Bank of America, Barclays, Goldman Sachs, and so on. So they trade 67% of the marketplace. So if you don't think there's money trading, then why would the banks and the major institutions be doing it? The other 33% is smaller banks, so in Australia, CBA, NAB, Westpac, and the other banks. Hedge funds and fund managers, superannuation funds, retail brokers for high net worth clients, and private traders like us. So that's what makes up that other 33%. If you have a look at this, the banks are making a lot of money from this. The question you've got to ask yourself, are they giving you this money? Unless you're a shareholder at the bank, then you're not making money from them trading your money. So they're trading your money to produce an income for themselves. And it's estimated that most banks make between 35 to 45% of their total income per year from Forex trading. So that's income they're making from your money. By actively trading Forex as a business, you have the opportunity then to make money from your money rather than the bank doing it. The difference between trading as a hobby and trading as a business is that you need to really follow business strategies. And as a former ATO auditor, I can tell you that trading is seen as either a hobby or a business by the Australian Taxation Office. And there's a few key things that would help them say, yes, you're in a business. So if you're in a business, obviously you have the benefits of claiming things like tax deductions from your business activities or the expenses that you incur as in running a trading business, such as education, such as seminars, such as training materials, such as trips to where people run seminars and so forth to learn more about strategies and structures. So if you ever look at it this way, you need to have a system, and we're talking about a system, you need to have a trading method that works, that produces consistent profit, that helps you lock in that profit and helps you minimize loss. So the tax office will look at it as, do you have a trading method that you follow consistently? Does it make consistent profit? Does it show you how to lock in profit? Does it show you how to minimize your losses? Yes, then you need to have structures in place to operate a business under. So do you have a business plan? Have you set goals and targets? Do you analyze your trades? Do you analyze your own performance as well? Yes, therefore you qualify from that aspect of actually running a business as well. And the final one is, do you have support? So do you have a system of education and coaching, both technical and mindset, that helps you improve your business, helps you produce a better return, helps you lock in profits, and helps you move forward into your targets and grow your business? So all of these structures we've implemented in what we call our Lift Investor Trader program, so that people have the opportunity to use a trading method that works consistently, have business plans, have targets and goals, have trade analysis tools, self-analysis tools, education, coaching, and support that helps you build a business from that to generate a consistent income. So that's what we do in our Lift Investor Trader program. And the strategy number 2 is have an active income strategy. And strategy number 3 is increase profit by compounding intraday. So if you trade as a share trader, most share traders have this buy, hold, and hope process where they buy into a share, they wait for it to either improve in value or produce dividends or both, and then they either sell it to cash out any profit they get or continue to get dividends from it. So that applies also what we call a position trading in foreign exchange, which is over weeks or months, where you hold a position, you have money in the market, and you have exposure to the market where it could go up, it could go down, and you've got in for the long term. Swing traders are more short term, where they trade in between highs and lows in the market as market cycles up and the market cycles down. What we generally tend to do is have a day trading approach or intraday trading approach, where we're looking at capturing some of the profits that occur within the day, where we've got minimal time in the market, minimal exposure in the market. When we're in the market, we're generally making profit. When we're out of the market, we're not at the whims or at the challenges of market forces. So having a look at a chart, for example, this is a chart which covers basically a week. These vertical lines represent a day. So this would be Thursday, Friday, this is Saturday, Sunday, Monday, Tuesday, and then moving forward. So really what we're looking for is in these active days, this 5.5 days per week, the traders are actually moving price. They're moving the market based upon whether they think the price is too high or too low. So if you would put $1,000 into the market between this range, it's 100 pips or 100% profit, you put $1,000 in, and after 4 days, you would take $2,000 out with this price movement. And you have a look at a 100% profit in a week it's ambitious. And it would again depend on your strategy, how much money you're putting in, how much money you're risking, and so on. In this particular type of strategy, you wouldn't have a large amount of money in there, and you'd have certain things we call stop losses to moderate any losses and so forth. But over a week, 100 pips, 100% profit is very ambitious. But if you had a look just at the same price movement, and you looked at it as basically just following what we call our current trend, in this particular example, the price is trending downwards. The price is up high at the left-hand side, down low at the right-hand side, so therefore it's an overall downtrend. So if we just trade with those trends on an intraday basis, we get 40% profit here, 20%, 15%, 25%, 20%, and 30%. So that's 60, 75, 90, 100, 120, 150% profit. That makes sense, 150% profit. So that's where strategy 2 comes into it. So you could actually make 50% more profit just by trading the intraday version of that downtrend that we can see on the chart here. But if you have a look at it where you compound your profit, so if you've got money into the market and you're able to leverage your profits into the next trade to increase your position size, it actually means you come out with $3,767. That's a 276% profit. So if you're looking again, this is very ambitious. If you stretch it over a month or even over a year, the percentage profit is consistent. So if you have a look at it, how this breaks down, your first trade is $1,000, you make 40%, you've made $400. You leverage that $1,400 into your next trade, you make 20% of $1,400, gives you $1,680. The next trade then you leverage that $1,680 into 15% profit, 1932, 25% profit on 1932 is 2415, 20% on 2415 is 2898, 30% on 2898 is 376740, and you can do the math as much as you like. This is how you can then compound. So whether you compound all of your profit or a percentage of your profit, probably the only strategy we ever taught in primary school or high school was that if you compound, you get better returns. Again, if you wanted to go through some of these figures, then by all means ask one of the trading business consultants when they contact you the next couple of days to go into how that would work for you and where potentially their returns are coming, because everybody that's in our program is in the pursuit of making this consistent profit, and Paul and Elena are no different. They're both in the program to generate profit. They're both traders in the Lift Investor Trader program, and they're both focusing on profit. So have a chat to them about their experience as well. Strategy number 4, so we had strategy number 1, 2, and 3, balance risk and reward. So the greatest uncontrolled risk in trading is done by people like this, where they want to make money, but they have no idea about risk profit, how to make a profit, what a business plan or what a trading plan is, or what a trading method is, and how to make a profit consistently. So really the most important thing that you can do to balance risk and reward is first become educated, understand the marketplace. One of the greatest investors of all time, Warren Buffett, says that he doesn't invest anything unless he understands it, or he understands enough that he can make money from it and then learn more about it as he goes. In risk and balancing risk and reward, you're looking for an opportunity to have a higher reward for a lower risk. We're not talking high reward, low risk. In trading, there's no reward without risk. To get a reward, there has to be some risk involved. But you can start really mitigating risks and look at your trading entry points and trading exit points to lock in profit, or to avoid getting into trades that are potentially have a higher risk and lower reward ratio. And we talk about that in our program as well, about really how to identify that on a trade by trade basis, using certain parameters that are baseline for us that we can see that are consistent across the marketplace. Here's a better entry point compared to this one, and here's where profit would occur. Here's why not to get into this other trade. So we use stop losses and account management to lock in profit and to minimize risk or minimize loss. So really having a safest approach as possible to our trading, to have this business-like approach. Most businesses have this type of strategies built into their business plan. We're no different. We like to have active trading strategies and active risk management strategies to lock in our profit on every trade and minimize our risk on every trade. Strategy 5 really is about using your experience to grow your profits. It's about the whole learn before you earn scenario, where you have this level of current knowledge that will get you just so far, but then going through a process to build your knowledge, your confidence, your understanding of the marketplace, and then grow your profits at the same time. In our program, we use a 4-step process. So step 1 for us is really laying your trading foundations. It's all about education, mindset, business, risk management, and trading, but you don't trade at this point. This is really about the establishment point of your business, where you're learning how to get started and taking those first steps. We say this is generally a good 2 to 4 week process of training and business planning, and that's how our program works as well. It takes into account that 2 to 4 weeks and gives you structure for that 2 to 4 weeks to help you grow from the start. When you get to step 2, you've got a little bit more information, a little bit more understanding, a few extra strategies that you can use as traders, a few more indicators that you can use, and you start to put them into practice in the real world by using a demo account or a practice account, where you can look at the real market, take trades based upon an account, but that account is not a real account. It's fake money. With this one, we suggest that you use that same 1 mini contract, $150, and you do 20 trades. And of those 20 trades, you're looking to get 70% profitable trades out of those 20 trades. So of 20 trades you complete, you're looking to have 14 profitable trades. And generally this is a 4 to 6 week process of people that we work with. So really it's about learning and then developing a consistent result using a trading method that works before you risk any of your own money on it. And then you get to the next point where you do start risking some of your own money. You become a profitable live trader. So you take the knowledge and experience and the consistency that you've developed in your demo account and take it into a live account. But again, you only start off with $150. And then to get to the point where you start looking at potentially compounding or increasing your position, you again want to generate 20 trades, 70% profitable. And this again will generally take about 4 to 6 weeks. With the confidence that you generate from that, your ability to generate that, we go to what we call step 4, which is where you'll have a better understanding of the marketplace. You know when to get into a trade, you know when to get out of a trade, you know how to lock in profit, and you're gradually improving the profits that you make per trade. This is when you can start looking at then leveraging this consistency into money in your pocket. And then money in the pocket, we have a couple of processes that people go through. One of the most consistent one is if they've got $5,000 aside in an account, for example, that they want to use to trade, they do that for 5 weeks, targeting about 15% profit per week. So that 15% profit per week, they've pretty much doubled their money from trading, and then compounding at some points along the way. Then once they get to the point where they've done this, then they're able to then for 5 weeks then they leverage that up into a larger investment. So they use the profits they generated in the previous 5 weeks and then use that to then start generating income per week. So $10,000 in a trading account, making 15% plus profit per week would give you about $1,500 per week income, which is right around about the $75,000 mark. So helping you then generate $67,000 plus of that average income per year just by investing $10,000 in your trades and then focusing on making a consistent return per week. So as we go through this, really at step 1, you're an employee of the trading method. You're really just getting your started. You haven't got a lot of leverage. You're not making a lot of money or making any money at this particular point. Once you have that basic knowledge, you then become self-employed, where you're practicing. You get out onto the tools, as it were. If you're in a trade, for example, you may not be making a lot of money from the start, but you're getting a lot of experience. That leverages into where you be able to use a system that we generate and we've created and the structures to generate an income. That's when you become a business owner. So the business is actually starting to make you more money. You've got more leverage. You're leveraging your time, you're leveraging your money, you leverage your understanding into generating an income. And then when you get to the point of step 4, you've generated an active trading income, but an active trading investment income. So therefore, you're actually creating an income from your money and your time and your experience. So this is where you start to grow your results by using your knowledge and experience. So that $67,000 per income per annum is really generated in about 8 to 10 hours per week and less than a $10,000 startup investment. That's what we're looking at as far as getting you started in this business to generate a $67,000 per annum income plus in the first 12 to 18 months. That's the target for most people coming into our program, is to generate that lifestyle income that could replace their current income, but in a lot less hours per week. Here's another strategy. So the biggest strategy is that you need to take action. Any opportunity in life, you've got the potential either to use it in your favor or to just watch it happen. Here's 2 possible financial futures. I hope you laugh at this one. This is option 1, where you've got like a nice little kiddie pool and your little toy fishing rod. And that's like how to spend one lifestyle. Or here's the other, which you get to basically live the lifestyle that you want. And the only difference between these potential possible financial futures is that if you take productive action, you're in a better position to then determine where you're moving forward and where your income will be. So that's a bonus strategy. Take productive action. Here's some of the traders' results, some of our traders' results recently. So we'll go through a few charts, a few examples. So here's Angela's. Angela made 11% profit in 10 minutes. So if you put $5,000 invested, that she would have made $550 in profit. In this one, Jamie's made 6.2% profit in just on 30 minutes. So if he's invested $6,000, that's about a $372 profit from that one trade. Jason made 16% profit in only 15 minutes. So if you put $4,000 in, that's a $640 profit. Peter made 29.5% profit in one evening session. $5,000 invested would generate $1,475 profit. Joe made 25.8% profit in one daytime trading session. $3,000 invested would give her a $774 profit. 18% profit on this one is on the Australian dollar, US dollar in under 1.5 hours. $3,000 invested in that would have given you $540 profit. Again, Peter's made 30% profit in just under 2 hours. So $5,000 invested would have given him $1,500 profit. This one, 10.1% profit in 1 hour. So if you put $5,000 in there, that's $505 profit. In this particular example, Ashley made 40.2% profit in one daytime trading session. So if you had $2,000 in there, you would have made $804 profit in that one daytime trading session. So are these typical results? For some of our traders, yes, they are. For most of our traders, the average trade people are producing between 6% to 8% profit, and they're generally doing 3 to 4 trades per week. So probably looking at anywhere from 15 to 20% profit per week is an average for most people when they get to step 4 in our trading program, which is where they're trading live, they're increased their profitability, they've learned a lot, and they're starting to earn consistently with that knowledge now. The Lift Investor Trader Support Program. So here's the support that we offer our members in our support program. We offer the ongoing business education and support. Here's some examples. We have handbooks and templates. So these are the two handbooks that you receive at step 1 and step 2 in our program to help you really get started. So all the technical information, all the information about how to start a business is really in these two handbooks. We also have templates available that we give you, also available from our website as well. Unlimited live workshops. So we have a 2-day workshop program where we teach you all the technicals, all the business, all the mindset, all the risk management, all the analysis tools that you need to really grow your business. We have live coaching events. We have at least 2 coaching events per month. We do them live. We do a live one and we do a Zoom one as well for those people who can't make it to the live one. We also have Zoom one at least once a month as well. We have a members community where our Lift Investor traders actually work together, share their knowledge, share their understanding, share their support to help each other grow through. So it's really a supportive environment, a community that we've created that is there for you as you get started and as you start to grow your business as well. We have online support. So it's a picture of our website and our Facebook page. We've got a Facebook group for our Lift Investor Trader Program members, which is where a lot of our questions occur. People might ask questions on there and get coaching from peers or coaching from one of our team of coaches. You can ask questions, you can post your trades and people can review them, or you can show people how you got in a particular trade. We also have on our website a growing video gallery. We've got forums, we have events that you can book into. So those coaching events, you can book in there. You could also book into free in your trading teams as well. So trading teams are where you work with a group of other traders, so 4 other traders, and you have an accountability and support structure that helps you. You can schedule regular events where you start looking at the market, analyzing the market together. And we also give you, via your trading coach, unlimited phone calls. So you can actually book in a trading time, a coaching session with a coach. You can send us emails, you can send us text messages as to if you've got any questions, if you have any trades that you need to have reviewed, they're all available for you. It's uncapped, so we don't have any barriers or any constraints on that as well. We have this is our live skill development workshop. So this is again our most recent one in the Gold Coast. This is one of our Brisbane workshops, one of the workshops in Melbourne, another workshop in Melbourne. We also have our regular live trading session. So this is the one at the Gold Coast. On the Monday night we had the coaching session, and this is with one of our trading teams going in. I was helping them go through and analyze the market and answer any questions on that particular session. Here's some of our team in the Gold Coast again when they get their certificate of completion, which is really important to note as well if you're looking at claiming anything back on tax as well as being a trading business. Then you obviously want to keep your certificate of completion to demonstrate that you actually attended an event that was integral to your trading business. Here's one of the other coaching sessions in Melbourne, and another coaching session in Melbourne as well. Another coaching session there as well. So becoming a Lift Investor trader, for us, it's a lifetime opportunity. We don't have any ongoing costs or upsells. There's no subscription fees. It's a one-off membership or one-off buy-in to become a Lift Investor trader, where you get to use all of our trading methods, all of our structures, and get all the ongoing support and education as well. We only accept up to 150 new traders across Australia each year. We do most of our workshops in Melbourne, Sydney, and either Brisbane or the Gold Coast. We do occasionally do regional workshops and also other interstate workshops in Adelaide and Perth as well. You receive unlimited personalised support. So it's about, we work with you in your business. It's not a blanket, you in a group, just in a group. You get one-on-one coaching so that we work with you to address your challenges, to help you build your goals, achieve your results that you're looking to do with your skills. We give you access to exclusive wholesale investment opportunities. So from time to time, we get approached by businesses and other investment brokers who have access to what they call sophisticated investment opportunities. And we help you find ways into these particular investments and give you the option of looking at, is this something that would work for you, for your diversification, for your portfolio? So the lifetime single, this is where the rubber hits the road. The investment in the program is $8,800. So that's a single or a couple investment. So a single person or a couple, but it's not mate, next door neighbor, or business associate, or friend, or brother, or cousin. We really work with couples or singles. The reason we do that is, as a couple, you've got two people in your team that are committed to one goal. We basically can coach two people as one. When you have people that aren't in a couple, then you've got two separate businesses. So we consider them as two separate businesses. So that's it. There's no upgrades, no upsells or add-ons. And you're always in control of whether you want to be in this program or not. If you don't, fantastic, fine, no problems at all. If you want to get some information from us about how you can get started, we're more than happy to have a chat with you. If you are interested, then we'll talk about how to do that moving forward. With the $8,800, most people either fund via either funds that they already have. They may have money put aside to start up a business. They may have money in self-managed superannuation fund. If they don't have access to the funds, they may qualify for finance as well. That depends on your credit rating as to what the amount is. It starts as low as $70.98 per week for 3-year finance. Again, it's something you need to consider whether that's right for you. It's something you want to get into, a 3-year commitment. That's completely up to you. Our first goal is that you recoup your cost of entry from your trading as soon as possible. As sustainably as possible, but as soon as possible as well. You always want to look at covering your initial investment first and then making profit from that. We give you a certificate of completion, as I mentioned before, which gives you an opportunity to claim a tax deduction. We also pay for your first $500 investment. So once you hit that step 3 mark in the program where you're actually trading live, we'll give you $500 into your bank account. You use it to fund your own account. We don't touch the money. We never have your money. It's always about, we give you the funds, then back the funds to invest for yourself. And as I mentioned before, some members can actually fund their membership from a self-managed superannuation fund. If you're interested in that, then again, have a chat to one of the trading business consultants as to whether it might be something that you could look into. Our May intake is now open, so our next workshops that are occurring in May, and we actually have 2 workshops scheduled. On the 11th and 12th, we have the Gold Coast. On the 25th and 26th, we have Melbourne. So we have 2 workshops available. So it's up to your choice which one you want to go to, Gold Coast or Melbourne. Or if you want to go to Gold Coast and Melbourne, depending on where you are, one might be closer for you. You have to take into account your travel costs and your accommodation costs and so forth. But they're the next 2 that are available. At this point, you might be thinking about this as whether a lift investor trading business is for you or might be for you. And here's a few things to consider. From our experience, being a lift investor trader doesn't suit people who are looking for a get-rich-quick scheme. They're looking to put little time, little effort, little money in and getting a big return. Doesn't work that way. If you're a person who wants money without working, this does not suit. We work with people to get better returns from their effort, but it's not without effort. We don't work with people generally who want a mediocre financial future. If you're happy with your income that you're getting from your job, fantastic, stay there, do that. If you're looking at creating something better for your financial future, something when you have a bit more financial control, getting a better return for less income or less time invested, then this might be something that would work for you. We don't work with people who want to become hobby traders. For us, it's a pointless exercise. We work with people who want to generate an income. So generally people that this program does suit are people who have about 8 to 10 hours a week to invest. And that 8 to 10 hours is from the start. And by the time you get to step 4, we start looking at ways of getting a better return in less time. So some of our traders we actually have on the line, we have Peter on the line at the moment and Elaine at the moment, generally trade a lot less than 8 to 10 hours. I think Pete's average is about 3 to 4 hours per week to generate between 30 and 40% profit per week. He's on about 90+% profit per week, and Elaine's in a very similar situation herself as well. So initially from the start, it's a maximum 8 to 10 hours a week. It's not generally more than that. If you put more time into it, doesn't generally mean more money. You get to a point where you put more time in, but it doesn't have that return on investment for you. If you want to create financial independence, if you want to learn and be coached, that's the only thing that we ask in this environment is we'll give you access to all the coaching, all the education that you could ever need. It's just that you need to be able to want to do something with it. If you want to have access again to wholesale investing opportunities, you want to start getting out of that retail investing situation where you put a little bit of money and you get a little bit of return, to a point where you can start putting a bit more money in and then have a better leverage on that to generate a larger return on that. If you want the lifestyle of a profitable investor trader, so if you want to actually be able to do stuff what we do every day, spend time with your family, spend time with your friends, do what you want to do, be with your partner, be with your family, be with your kids, watch them grow up. If you've got kids and you want to be more active in their life, volunteer at their school, coach their sporting team, help them grow, or work for a charitable institution, that's something you've got available when you've got more time, when you've got more money to be able to do that. And we also work with people who take productive action. For us, it's all about being productive. That doesn't mean you have to be the best. It's just that you need to want to move forward. And every time you're doing something in your trading business, you're really focused on, how is this helping me grow my business? So in this process, and it's a process that people go through, this journey that you go through, you can hit basically 4 stages. And where you are is just where you are, and it's completely fine where you are as well. But I'll just run through the stages of where you might be. The first stage is that you're gathering information. You're looking at, what do I want to do? What's available? What's out there? Once you've gathered enough information, you might get to the point where you start to evaluate your options, looking at different aspects of different options that you have to see which is best for you, which is more right for you. From that point, you get to a point where you're starting to make a decision about what action you want to take. But there's often something that happens for most people between step 2 and step 3 part. Major life change, relationship starts, relationship finishes, you have a baby, or you have some sort of traumatic event where you're caused to make a decision. And as human beings, it's natural for us to often leave these decision making until the point where it's a very last opportunity to get something done with it. What I'd suggest is, at this point, when you go from making a decision to getting started, that's generally the shortest time frame, is making a decision and getting started. What I'd suggest is, if you're in step 1 or step 2 of this and you're looking at getting into step 3, look at really taking this productive action and not letting this traumatic event be the reason why you have to get started. Generally, if you prepare a little bit more beforehand and start taking actions today, it becomes a lot easier to get this result later on. So I suggest that if you're looking at creating financial freedom, it's built on commitment, not on convenience, or not as a result of something major happening. Take your future in your hands and really start looking at what you're going to do, whether it's this or whether it's something else, whether it's writing a book or starting an online store or doing something else that will have you hopefully create a lifestyle income. Start taking productive action towards that. So your next step really is, at the end of this, which we're going to be wrapping up in a couple of minutes, we're pretty much spot on 8 o'clock, is over the next couple of days, one of our trading business specialists will make contact with you. It's not to sell you anything. It's not to get you into anything. It's really to answer any questions that you've got and see whether there's anything that we can help you with moving forward. And that's really in your hands, and every step of this process is in your hands. And regardless of where you are in this process, one thing to be really aware of is that you really can build your financial independence regardless of where you're starting off now, where you want it. But the most important thing is that, again, why do you want to start trading? Why do you want to have a laptop lifestyle income? What is it about you that attracts this to you? And why do you want to move forward?